And welcome to this week's Market and Economic Update. My name is Michael Johnson. I am the founder of Flagstone Financial Management. And today we're going to talk about presidential elections and how they impact the stock market. This is a very emotional topic that comes up a lot in our client meetings. And so we're going to provide you a little bit of data that might help you separate those emotions from how you choose to invest. Generally speaking, it isn't positive to, spoiler alert, I guess, it isn't positive to tie your emotional feelings about politics and your particular candidate to whether or not you invest or whether or not you sell your investments. So we're going to try to give you a little data to help support that thesis. First, we'll look at this chart that looks at stock market performance and various presidencies. You can see that Republicans are represented by red, Democrats in blue. The stock market has performed well across both political parties. This chart shows that the long upward march of the S&P has occurred across many different presidencies and different political parties. In fact, the worry that a particular candidate will ruin the economy or kill the market has been said about pretty much every president in modern times. This was certainly said about President Obama, President Trump, and more recently President Biden. And yet the S&P rose roughly 236% during the Obama and Trump years, despite how vast the perceived differences were between those presidents. Now, this has continued over the past 3 years, with the market reaching new all-time highs. In hindsight, it would have been a mistake to make investment decisions based solely on who was in the Oval Office, and we frankly had people at least try to do that. We tried to talk them out of it, but we had plenty of clients that between those different presidents make comments around thinking that the market was going to crash if XYZ president was going to be elected. So it's a real thing. We believe what really matters is the underlying business cycle. This chart shows the annual returns for the S&P 500 along with the average annual returns for each president since FDR. While president certainly influences policies which can affect taxes, industries, and the economy, there are many other important factors that drives these cycles. Perhaps the best examples is the Clinton and George Bush years. Clinton benefited greatly from the dot-com boom throughout the 90s, resulting in budget surpluses and a historical bull market. And then George Bush, on the other hand, came in during the dot-com crash, which, many of the policies that were in place, or maybe the exuberance that had nothing to do with policies, happened under Clinton, but he was there to capture the crash on his record. And then the tail end of his presidency coincided with the 2008 financial crisis, which may have had things to do with his policies, but also had there were some Democratic policies that were in play there that caused some of that to potentially happen. So anyway, bad timing aside, it'd be hard to argue that these presidents alone were responsible for these booms and busts. Many other factors such as technological and financial innovation played a much larger role. Finally, this chart summarizes the discussion well that we've been talking about. It shows that on average, the S&P returns have been positive across both parties. During their presidencies alone, Democrat presidents have done a little bit better. If you give a 1-year lag, which a lot of people say is appropriate since it gives that president a chance to implement some of their policies, it's almost neck and neck. And really underscores the balance of separating our political views from our financial decisions. Thanks again for taking the time to watch this video. I hope it's given you a little bit of insight and a little bit of data to help separate your political views from your investing views. We think that will help you over the long run. But if you have any questions about this or anything else, you know where to find us. Thanks so much.